Assalamualaikum and hi. We are from MAC 2207F and our group will discuss on the issues of Barings Bank. First thing first, let's go through our team members. Our team members consist of Ahmad Muaz bin Noor Hishamuddin, Arif Zakwan bin Ali Akbar, Muhammad Zulfauzan Aiman bin Jamil, and me myself, Muhammad Aiman Safwan bin Noor Hisham. Now, we move on to the background of Barings Bank. Barings Bank was a British merchant bank based in London and one of England's oldest merchant banks. It was founded in the year of 1762 by Francis Baring, a British-born member of the German-British Baring family of merchants and bankers. This bank traded on its own account and on joint account with other merchants, buying and selling commodities and other goods in British and also overseas markets. Barings Bank also acted as London agents for overseas merchants, arranging shipping and insurance, and making and collecting payments. Now, we will discuss on the brief history of Barings Bank. For the first part, which is in the span year of 1762 to 1889, Barings had greatly expanded its resources both through Francis' efforts in London and by association with leading Amsterdam bankers. In the year of 1793, the increased business necessitated a move to larger quarters. Meanwhile, in the year of 1800, the company was reorganized as Francis Baring and Company. For the second part, which is in the span year of 1891 to 1992, Barings Brother and Company Limited was formed, to which the viable business of the old partnership was transferred. The assets of the old house and several partners were taken over and liquidated to repay the rescue consortium, with guarantees provided by the Bank of England. During the Second World War II, the British government used Barings Bank to liquidate assets in the United States to help the finance the war effort. After the war, Barings was overtaken in size and influence by other banking houses, but remained an important player in the market until 1995. For the third part, which is in the year of 1995, Barings was brought down by a massive trading loss caused by fraudulent activity and trading by its head derivative trader in Singapore since 1992, which is Nick Leeson.
Okay, now we go to the risk management issues at Barings Bank. Before we give out the issues, we want to share that risk management is an important process because it empowers business with necessary tools so that it can adequately identify and deal with the potential risks, thus allowing them to mitigate the risk easily. Okay, the risk management that we found in Barings Banks are: first one, poor hiring procedure, which is young and inexperienced employees. Listen, hire young and experienced professional that leads to the mistakes of purchasing 20 futures contracts from the Japan government bond that ends up making Listen to cover up the mistake by concealing unauthorized transactions. And if Listen hire the suitable and experienced professionals, the risk of mistakes occurrence might be lower than the inexperienced ones. So the second point is we focus on the internal control of Barings Bank, which is very poor. The first one that leads to fraud. The event where Listen cover up his employees' failure by concealing unauthorized transactions, manipulating the financial statements, and forged documents are straight up fraudulent act. It shows that the internal control is ineffective, where an effective internal control should be able to prevent and detect fraud or error and secure as far as possible the completeness and accuracy of the records. Okay, the second one is no supervision and authorization. The lack of controls over the Singapore office, the disinterest of supervisors in reviewing transaction records and internal auditor reports, the number of customers with large volumes of transactions, and the positive figures that Listen reported as profit made it easier for transfer orders to be accepted without many obstacles. Without supervision, Listen is free to manipulate the transaction and making the bank exposed to risks such as financial risk or regulatory risk. The third one is no segregation of duties. Listen holds two positions, which are a trader and a back office manager, where it allows him to perform transaction and adjust according to his own instructions. The two positions must be held by different personnel to reduce the risk of fraud. The person who performs transactions cannot authorize himself to do it. And the third point is did not assess risk thoroughly. In this case, the Japan market. Listen performed a transaction in the Japanese market, but it collapsed because of an earthquake. Listen should assess the market first rather than relying on hope, because anything can happen. Listen could conduct an ERM to identify potential events that may affect the entity and manage the risk to be within its risk appetite to provide reasonable assurance before perform some transaction. Because ERM can enhance decision making.
Hi, my name is Ahmad Muaz bin Syamuddin. Now we look on the role of Board of Director and Audit Committee, factors of collapsing of Barings Bank, the implication and the lesson for the management. First, what is the Board of Directors? So, Board of Directors is a group of individuals that elected by the shareholders of a corporation or organization to manage the business and appoint its officer. Next is Audit Committee. What is Audit Committee and its role? So, Audit Committee is made of members of a company's Board of Directors and to oversee its financial statement and reporting. Audit Committee must include outside members as well the expert in finance or accounting to produce honest and accurate report. Next, we look on the factors of the collapsing of Barings Bank. The first factor is inadequate control by the management. As evident, there are several requests made by Nate Lesson was accepted without proper supervision by the supervisor on the transaction made by him. It shows how the company failed to control its employees. The second factor is poor risk management. As fact, the management ignores the possibility of risk will happen regarding unauthorized transaction and adjusting made by Nate Lesson. And at the end, the company suffer loss and collapse. The implication that affect Barings Bank is that they have suffered massive amount of losses on trading. The investigation made by Bank of England revealed that Barings Bank have cumulative loss amounting to 100 million and unrecognized loss amounting 185 million. Next implication, it make the shareholders and stakeholders lost interest on them. This case make the image of the company worse and they do not have faith in Barings management in run the company. And lastly, the lesson that management can take and learn is first, the management team need to know and have duty to understand fully about the businesses that they manage. Second, the top management and audit committee have to ensure that significant weaknesses and identify it to get resolved it quickly. Last, they must know that they have a responsibility for each business activity to be clearly established and communicate to all relevant parties.
In the case of Barings Bank, we can conclude how a single person can bring the collapse of the largest and most stable bank in the financial world. The primary issue with the bank is the institution placed too much trust in the head derivative trader in Singapore, Nick Lesson, to manage arbitrage derivative contract listed on both the Osaka Securities Exchange and the Singapore International Monetary Exchange. The matter started worsening when Lesson did not follow the actual strategies and made his own decision to rake up more profit from the trade. However, the Kobe earthquake in Japan had caused a massive loss to Listen and Barings Bank, and this had resulted the bank discovered the losses and bring the institution collapse in 1995. The matter that caused the failure is that the bank had numerous shortcomings in its risk management policies and procedures, which enabled Listen's flagrant abuse. The most prevalent shortcoming made by the bank is Listen was in charge of both the trading desk and the settlement procedures, which are typically handled by distinct individuals. This situation had enabled Listen to cover up the crime he committed and produce a false report. The aftermath of the scandal had made all financial institutions become more prudent as they started to separate the trading from the control group. Hence, this had bring more spotlight to the importance of business risk management.